Welcome to our regular segment on Case of the Week. This week's case relates to estimated tax and withholding. As a reminder, these are real-life cases drawn from calls to our consultants on the resource desk from financial professionals all over the country. We recently received a question from an advisor in Ohio concerning a client who incurred an under-withholding penalty tax due to a large Roth conversion that occurred late in the year. Her client executed a large Roth conversion in the fourth quarter, and the IRS subsequently notified her that a penalty is owed on account of underpayment of estimated taxes. The advisor wanted to know how this happened and what can be done about the penalty. Let's first review the rules concerning the timing of tax payments. The IRS requires at least 90% of the tax owed to be paid before the April 15th tax filing date. Many individuals make quarterly estimated payments to avoid underpayment penalties. However, certain retirement-related transactions, such as large taxable distributions from 401ks and IRAs, and Roth conversions, may trigger a penalty assessment. Recall, in this situation, the client made a large Roth conversion in the fourth quarter of the year. Unfortunately, the IRS assumes that taxable income from these transactions occur throughout the entire tax year. Thus, from the IRS's perspective, the large fourth quarter Roth conversion occurred throughout the year because no estimated tax payments were made in the first 3 quarters, and thus a penalty was owed. Fortunately, the client can request a waiver of the penalty by filing IRS Form 2210, Underpayment of Estimated Tax by Individuals, Estates, and Trusts. The client would note the large Roth transaction occurred in the fourth quarter, and thus quarterly estimated taxes were not due in the first 3 quarters, and the penalty should be waived. Anytime a client has a late year large retirement-related taxable event, such as a Roth conversion or any large distribution, a discussion about the Form 2210 and how it can be used to potentially get the penalties waived is certainly warranted. In closing, as a financial advisor who works with individuals, you can play a pivotal role in helping them with cases such as this. If you're looking for more in-depth written information, you can find it at our website at retirementlc.com.